Welcome to the What's Your Deal podcast, where we discuss business acquisitions, investments, management, and exit strategies. I'm your host, Matt Uhler. Let's dive in. Welcome to another episode of What's Your Deal. Today I'm flying solo. We're going to have a conversation about equity deals. So what are equity deals? Well, if you're familiar with my background, I have an ownership interest in a little over 20 businesses. With almost every one of those, they are designed as a partnership. And a question that I'm asked very frequently is, what does that look like? How do you do that? And where do you come up with enough time in the day? Well, I can tell you that those are great questions, and it's been something that's evolved over time for me. So let me take you back to where this started for me and why I started pursuing this so diligently and what it has brought me today. And from that, you will understand how you can create the same in your life if you choose to, and why you might want to do that. So for me, I was working as a business broker. After being a business owner, I started being a business broker, where I was helping people buy, sell, and finance businesses. And about 7-8 years into that, I loved the industry, couldn't get enough of it, and it was a transactional industry for me. And what that means is that I would find a great business to list. I would list that business. I'd find a great buyer. The buyer would buy it. I would close the transaction, and then I would need to find the next one. And even though I earned a very handsome income from that activity, it was transactional. And what I wanted to do was to diversify my income through investments. And I invested in real estate in the past. I knew how to do that. And I had invested in the stock market and mutual funds and had financial planners help me. But I really didn't understand the stock market and the financial planner aspect. And what I mean by that was I wasn't crystal clear on what my returns were. I wasn't understanding exactly what it was I owned. I had absolutely no influence over how well that investment did or didn't do. And that frustrated me. It also wasn't changing the quality of my life, frankly. That money seemed like money that I would just forget about. And it could be down for years or up for years, but at the end of the day, I wasn't collecting an income from it. So I set out with this intent to create my own mutual fund of what I call Main Street businesses that I could have an ownership interest in. So what does that look like? Well, fast forward to today, what that looks like is an ownership interest in over 20 businesses that are extremely diverse in their location and their industry and their income levels and their management, the whole 9 yards. So that I have an interest in health and wellness businesses, excavation, construction, insurance industry, finance, brokerage. I mean, you name it, hard money lending, rental properties, fix and flips. All of these different industries are businesses that I get to participate in through this mutual fund that I've created. And it's now to the point where the income from those business activities exceeds my income of working as a broker, which is great. Now, am I focused on long-term growth? No, I'm not. And it's not that I'm opposed to it, but again, I wanted to duplicate my income. I want more income now when I'm alive and able to enjoy it with my family and myself, as opposed to putting it for another day that I may never see. Now, that doesn't mean that I don't believe it's wise or don't invest in long-term vehicles such as retirement funds. But my objective for me was to create a way to duplicate my income now. And that's what I've been able to do through these businesses. And that's what a lot of the people who are asking me about how I've done this want to do as well. They want to diversify and supplement their income. So who could this be for? Well, once I explained to you the framework of how this works or how I've designed it over the past 20 years, it can be for an individual who is somebody who has a core competency or experience in a particular industry that wants to have an ownership interest in a business, but does not have the capital or all of the capital necessary, right? So that's the operator. Or it can be somebody who has capital and has ideally some expertise that they can bring to the table, and they want to invest in a business like this to create more of a passive income. So those are the two ways that I've seen these come together, and the parties that need to come together in order to make it effective. So what does this look like? Well, it usually starts with either a great business that you can acquire just like you would any other business, or it starts with an operator who's able to buy a business and shop for a business. The reason those are the two avenues is because if you currently own a business, more than likely, you might be able to add one more business to your workload, or maybe even two. But without a structure and a framework like I developed for myself, it's not duplicatable. It's not scalable into 20 businesses or more, as an example. It's one or two. Now, is that better than one business? Of course. And there is benefit to having multiple streams of income from multiple businesses, and that's what we're after. So if this is intriguing to you, we're going to go down this road and dive into the weeds a little bit. Now, there's lots of intricacies with this that need to be vetted in order to be able to do it effectively. And I have a method of providing support for you, which you can see in the show notes. So if you like what we're talking about and you want to take it to the next level, we can get into the weeds. But I just want to, in the time we have here, I want to expose the concept and share enough information for you to decide if this is something for you or not, and understand the fundamental basics to what makes it work. So we've already talked about you need a good business and you need somebody who's got a core competency. So what is a good business? I get asked all the time by people, so what is the best business to buy? And my answer, very realistically, but also a little bit sarcastically, is a profitable one. And the reason I say profitable is because I want to buy businesses that generate enough income to support themselves and provide a return for investment for the owners. So it has to be profitable. I'm not necessarily focused on car washes or laundromats or service type businesses, because what I've seen is that an industry that works in one area may not be a phenomenal industry in another area. So you might think that through with me. Why would that be? Well, you could have an excellent industry. Let's pick one. Let's say it's a landscape company, as an example. You could have an excellent landscape company in a town that doesn't have much landscape competition that could be a great buy in that community, but yet in another community where the competition is saturated, or where there's a very large competitor that just dominates and you can't compete with, well, that might be a business in that industry that I don't want to buy. So I personally am much less focused on seeking a specific industry to purchase than I am focused on that specific business and that specific situation. Now, there are certainly industries that I don't want to participate in, but for the most part, I'm open to looking at any business that makes sense financially and can provide the result. What needs to happen for a business to make sense financially? The business has to be, in my opinion, able to pay for itself, meaning cover any debt service or provide a return on investment if you pay cash, and support the new owner. That's what I refer to as financial feasibility. So let's back up again. So what are the steps that are necessary? Number one, you've got to have a business that's worthy of your purchasing. Number two, you've got to have boots on the ground, which is somebody who's going to operate the day-to-day and has the ability to do that well, right? When you put those two together, quite frankly, the rest is just time and process. Those are the pieces that are critical to making it happen. So let's say you decide you like this idea and you're going to go out and try to duplicate your income through buying a business. You found a business to buy, and you found an operator who can run the day-to-day because you're not able to because of your restraints. Then what? Then it becomes determining how you're going to fund the transaction. Are you going to fund the transaction with seller carryback? Are you going to pay cash for it with all of your partner's money? Are you going to use a combination of SBA financing and cash? How is that going to happen? That's going to determine the next steps and the structure for which you proceed with the financing. Now, a lot of people look at partnerships from a standpoint of, well, I'll bring the money and you'll bring the work. So it's a 50-50. And there's a lot of that out there. I have seen that fail in many occasions, because if the person who's providing the work decides that they don't have to work as hard, or if they're not working as hard as the other partner wants, or if there's some combination of debt, those simple percentages can get awry. I tend to approach this much more from a standpoint of, based on the structure, what makes the best sense between a combination of debt and equity to provide the greatest return for the partners. So again, I'm going to say that again. I tend to focus on this from a standpoint of structuring the deal as in a way that provides the greatest return on the investment between debt and equity. That's what I'm focused on. So once you have that piece figured out, then you solidify the partnership through an operating agreement. What is an operating agreement? An operating agreement is a document that spells out, if somebody dies, here's what you're going to do. If somebody wants to quit, here's what you're going to do. If somebody wants to sell their interest, here's how they can do it. If somebody's unhappy, here's how they can do it. How do you report to your partners? What decisions can managers make? So there's a whole lot in there. And in my partnerships, these documents are typically, call them 30 pages. But that is the document that, to me, is fundamental in making sure you have a successful partnership as opposed to a failed partnership. That document paves the way for that. So again, we'll go back to the beginning. Good business, good operator. You structure the deal in a way that makes financial sense and is financially feasible. You pull together your partnership and you structure it with an operating agreement. And what do you do next? You close. And once you close on the business, you are the proud owner of that business. And now you get to put your mechanism, this whole partnership structure, in place. The way I personally manage that is that I have an accountability system in place that helps keep the advisory board, the owners that are responsible for monitoring success, it keeps them up to speed and focusing on the business when they need to, which is typically monthly. And then I also have a system where the advisory board, or the managers, as we'll call them, report to any partners that are more passive the results of the operation. So for me, this looks like I said, a little over 20 businesses where on a regular basis, we receive financial statements from an accountant. We're able to evaluate the performance of the business. We discuss any aspects of the business that need care, focus, or adjustment. And then at the end of each month, we distribute profits based on maintaining an operating capital reserve and what's left over to be distributed. So if you like this idea, you might say, well, what kind of return on investment should I expect? You know, if you're in real estate, depending on the cap rate, you might get 6%, you might get 8%, you could end up with something at 10 or 12%. That's a phenomenal return, typically for real estate. For me, when I'm evaluating an equity deal like this, the return on investment has to exceed 20%, or I'm not interested. Now, it's not interested because I don't care or because I don't want to do the deal. It's that I'm looking at deploying capital for a return. And based on my risk reward, it needs to be bare minimum of 20%. I've had equity partnerships that have returned as much as 90% to me in 1 year, and I've had them that have returned 0. So again, back to the fundamentals. Why have a mutual fund? Because I've had some that return 90% and I've had some that return 0. So when you blend those together, I generally receive, I'm going to call it 3 times what I would typically receive if I placed money in the stock market. So this is the framework. This is the system that I've used to create this multiple streams of income with a more passive activity. It's allowed me to do far more than I could do on my own with partners that I appreciate and care about, and they care about me, and the financial reward continues. And the more I can stack these wins, then the more income I generate and the more diversification I have, and so on and so forth. So that's the framework. If this is intriguing to you, in the show notes, there's information about how you can take a deeper dive. Now, what's a deeper dive look like? I just went through with you in less than 30 minutes what typically is 3 to 4 months of process to actually put one of these things together and have it start producing income. So going into the weeds with more detail would have to do with how is the financing structured, ownership percentages, how is the whole deal structured, how do you evaluate the business, how do you evaluate the operator, what's the operator supposed to be paid, the operating agreement, what should be in the operating agreement, what don't you need in the operating agreement. These are all aspects of what I've learned, in some cases the hard way, to be able to piece this together where it provides the return that's acceptable and desirable for me and honestly life-altering. So if that's exciting to you, I would love to talk with you more about it. If it's not exciting to you, hopefully that you found this episode intriguing and opening your eyes to how you might be able to duplicate income in your world in a way that serves you using some example from this framework. So I hope you've enjoyed this session. We will see you on the next episode. And that's a wrap on today's episode. We hope you enjoyed the conversation and got some valuable insights into the world of buying and selling businesses. Want to be a guest on our show? If you have a deal that you'd like to discuss with us or a business story to share, we'd love to hear from you. Shoot us an email using the contact information below in the episode notes, and let's make this happen. Never miss an episode. Make sure you subscribe on Apple Podcasts, Spotify, or wherever you listen. And if you found today's episode helpful, please leave us a review. It helps more people like you find the show.